Hi guys, the next factor from the series of 10 important keys for the stock market success is the capital protection. Think about your capital protection before your profit. To keep making continuous profit, one has to sustain in the stock market for a long time. And for that, it is very essential to check and protect your capital on ongoing basis. One needs to understand the time value of money in the perspective of capital protection. For example, if you bought a stock 2 years before and now selling at the same price, thinking that at least my capital is recovered at par, means the purchase price now you just got while selling, and you think that the price got the cost of the stock got recovered, but that is not correct. Because of the time factor, your capital got eroded to the extent of inflation. So there are two aspects here in the capital protection. One is when you invest in the stock, make sure that whatever you invest has been protected with certain stop losses, with certain monitoring on your portfolio, that to the extent how much I can allow to erode my capital, monitoring the various stocks. If I find the stock do not have any potential, or rather stock has lot of negative news which will take the stock down, so in that case you need to make a decision of getting rid of that particular stock, because if you do not sell that stock right away, your more capital will get eroded over the period of time. So that is one aspect of the capital protection. Second is, along with the time value of money, or along with the time, your capital should appreciate more than the inflation rate, and that is the way, these are the ways like you can think of protecting your capital. Okay, so next thing here is risk reward ratio. Stock market reward is always associated with risk. So always one has to be very calculative in stock selection, where probability and the quantum of reward are much higher than the risk. The golden rules for this are more transaction with higher profits and minimum transactions with losses. Keep winning business and sell losing business. But many times we notice this happens other way around. The stocks which are giving you the profit are sold earlier, and the stock which are making loss for you are in your portfolio for years and years. But the thing should be, the stocks which are doing good should be the part of your investment for longer horizon, and the stocks which are not doing good, or the companies which are not doing good, they should be sold as earliest. The only way to avoid large losses is to make them when they are small. Lot of time when we get to know that particular company is not doing good, But we think, if we think the this phenomena is temporary, and we believe that once this phenomena get over, again the stock will perform, in that case there is no hesitation in holding up that particular stock. But some of the perspective related to the business are having the long term impact. In that case, it is better to take losses at earlier stage, so that we can save our portfolio with minimum losses. Profit are the reward of managing risk effectively, and losses are the penalty for managing the risk poorly. So basically, it is very important to identify, monitor, and manage the risk of your portfolio while you are investing in the stock market. And that is where the risk reward ratio helps you in improving your profitability of the portfolio. The next thing here is, what could be the good stock for the investment? The good stock for investment is the stock having good fundamentals. Along with the good fundamentals, it has a very good growth potential, and the company or the organization management is excellently managing the company, so that growth will sustain and the fundamental will be intact. And on top of that, if you get this kind of stock with the price, low stock price in terms of P value is the value buy. It is price to earning ratio we have seen in the fundamental part of this video. So with reasonable P value and with the stock having good fundamental along with growth potential and good management, company are some of the criteria for good stocks for your investment. Thank you.